More market chatter now with Sanjay Sinha, the founder at Citrus Advisors. Thanks so much for joining us here on Markets at Lunch. Turning out to be a decent Monday for the last street. If you're a bull, that is. Look at the trading chart. We were discussing for the last couple of weeks how our markets had been directionless. There was no immediate triggers, maybe barring trade wars. Do you think that has changed, and that too at a time when investors are getting jittery and we're seeing liquidity concerns with respect to mutual funds and the long-term capital gains tax?
Okay, so many things rolled into one. If you look at the events which have happened over the last maybe 15 days, I think except for probably the noise which has been made about the tariff war between US and China, some of the events that have happened specifically in the Indian context are actually positive for the market, and the market has responded likewise. The SkyMed projection that we will have a normal monsoon with the possibility of above average rainfall, I think has been received very positively by the market. But I think the most significant thing that has happened is the RBI policy casting a dovish tone with the outlook on the inflation rates prospectively to be lower than what they have projected in the past. I think this event is a very significant event, and there's no. I'm therefore not surprised that the market has responded to that. At the same time, if you probably drill one level below that and see as to what has happened to some of the administrative actions and their impact on the sectoral prices, Reserve Bank of India came out with a circular on the 12th of February which cast some I will say misgivings about the quarterly reporting on the PSU banks specifically for the fourth quarter. The fact that the Government of India came out with a much more modest borrowing calendar for FY19, and subsequently the Reserve Bank of India's action allowing banks to stagger their bond losses over 4 quarters, I think more or less negated that negative impact. And in the period post 23rd of March or so, when I think the Nifty touched its low, if you see PSU banks are the best sectoral performances in the market. So I think where we stand today, much of the misgivings of the past are now can say are being put to an even keel, and we have much more positive things to look forward to. And the most significant thing is the quarterly results which will start coming out, and hopefully this will be the second quarter of double-digit earnings growth for the Nifty, and that will build the conviction which will to a large extent justify the concerns, justify the apprehension that we have. That I will say not justify, I will say allay the apprehension that we have about the current valuations of the market.
Oh man, Sanjay, this could be 2017. I remember at the start of the last financial year how everybody was hoping that the year that's just gone by would be the year where we would see the recovery in the earnings, etc. But jokes apart, I want to get your views on the banking sector, because today is also marking out to be a day where you're at least seeing some fresh interest in private sector banks, being IndusInd or a Kotak. ICICI languishes in the red. You've seen some technical bounce back in the public sector banks. What's your call when it comes to this? Should one just stay far away from it and use opportunities like today to exit, or do you think what is being said is being blown out of proportion, and at the end of the day the fundamentals are strong?
Okay, so the response would be whether my outlook was going to be tactical in nature or whether that is going to be strategic in nature. If you are going to shy away from 30% of the market weight, I'm not sure where you will be going looking for opportunities. You can't also rule out the fact that specifically in the context of PSU banks, which actually year to date are still as a sector trading negative. One of the big things that is going to happen over the next 2 to 3 weeks is going to be the large number of NCLT resolutions that we will have. I think close to about 9 to 10 NCLT resolutions are time bound and have to be completed over the next 20-21 days. And the total amount of bad loans that is stuck there is about 2.2 trillion rupees. Even if you take a 50% haircut, we are talking about close to about more than $1 trillion worth of possible write-backs into the books of PSU banks. So a lagging sector within the banking is probably now seeing some optimistic signals. As far as the private sector banks are concerned, look at the trajectory of the auto sales, look at the home loan growth. These are all the retail focused activities where the private sector banks have been very active. So you cannot be part of this market without having banks as your portfolio. And as far as I'm concerned, I am quite bullish on banks.
Okay, Mr. Sinha, it's Karunya here. Hi from the Mumbai studios. Just wanted to get in a sense of, you've already spoken at large about banking and something that you're really bullish on. But on the flip side, it's pharma, something that you have an avoid stance on for this point of time. Why would you say that? Because given the kind of growth that we've seen come by in the Indian pharmaceutical space, even a lot of people across the street are also very upbeat on pharma earnings to recover in the next say 1 or 2 years. But what makes you not so positive on the pharma space still?
Okay, I need to qualify my view in the sense that, my view on pharma as an avoid is more tactical in nature, given the fact that, if I have a limitation in terms of the pool of money that I have to allocate, I would prefer to allocate that money more to cyclicals than to say a clutch of defensives. My portfolio anyway is going to be overweight cyclicals. Within defensives, if I have a choice between say IT and pharma, I would prefer to put more allocation within IT. Pharma for me is an avoid, not so much to do with the outlook on the sector as a whole, but the fact that there are too many company specific accidents which have happened in the past thanks to regulatory actions, and we cannot rule out that possibility going forward. And therefore, if I have to take a sectoral call and I have to take a sectoral pick, I think I will get more opportunities without having to live with this possibility of company specific accidents in the IT sector vis-a-vis the pharma sector.
Get your point. Thanks a lot, Mr. Sinha, for joining in and giving us your perspective.